$47 billion. That is Anthropic's annualized revenue as of May 2026. Back in January, it was $9 billion. 5 months. 5 times growth. No software company in history has ever grown this fast. And on June the 1st, that same company quietly filed to go public. Today, we break down the AI IPO that puts the entire boom to the test. Anthropic was founded in 2021 by Dario and Daniela Amadei, along with 5 other researchers who left OpenAI over disagreements about safety and direction. Their bet was simple: build AI that is safe, steerable, and honest, and prove that safety and capability are not opposites. The result was Claude, a family of AI models that quietly became the workhorse of enterprise AI. The valuation history tells the story. In early 2023, Anthropic was worth about $4 billion. By March 2025, a Series E round valued it at $61.5 billion. 6 months later, in September 2025, a $13 billion Series F nearly tripled that to $183 billion. In February 2026, a record $30 billion Series G, led by GIC and Coatue, pushed it to $380 billion. And on May the 28th, 2026, days before the IPO filing, a $65 billion Series H valued Anthropic at $965 billion, overtaking OpenAI in private market value for the first time. But the revenue curve is even steeper. In January 2024, Anthropic's run rate was just $87 million. By December 2024, $1 billion. By the end of 2025, $9 billion. Then came 2026, $14 billion in February, $19 billion in March, $30 billion in April, $47 billion in May. For context, Salesforce needed 20 years to reach $30 billion in annual revenue. Anthropic did it in under 3. So what exactly is the market buying? Here is the uncomfortable part. Anthropic is projected to lose $14 billion in 2026. Inference costs, the cost of actually running Claude, came in 23% higher than expected last year, dragging gross margin down to roughly 40%. That is software revenue with hardware economics. So where does the money come from? Claude Code, the company's agentic coding tool, hit $1 billion in annualized revenue within 6 months of launch and passed $2.5 billion by February 2026. Enterprise API contracts make up most of the rest. Over 80% of revenue comes from businesses, not consumers. And the spending is at least strategic. Anthropic projects training costs peaking around $30 billion in 2028, roughly 4 times less than OpenAI, which expects to spend $121 billion on compute in that year alone. Management projects positive cash flow by 2027 and profitability by 2028 or 2029. So the pitch is this: yes, we lose billions today, but we lose them more efficiently than anyone else, and the curve bends soon. The question is whether public markets have the patience. How does this IPO stack up against history? Anthropic is reportedly targeting a raise of over $60 billion. Saudi Aramco's 2019 IPO, the long-standing record, raised $29.4 billion. Alibaba raised $25 billion in 2014. Facebook, $16 billion in 2012. Only SpaceX, which went public just days ago, raised more, at $75 billion. But here is where it gets interesting. At $965 billion, Anthropic would be valued at roughly 20 times its current revenue run rate. SpaceX went out at 94 times revenue. Google IPO'd in 2004 at about 16 times. For the fastest growing software company in history, 20 times revenue is, by AI-era standards, almost reasonable. The banks agree. Goldman Sachs, JP Morgan, and Morgan Stanley are all competing to lead the deal, and the target listing is October 2026. If public demand matches the private markets, where the last two rounds were heavily oversubscribed, Anthropic becomes one of the 10 most valuable companies on Earth on day one. Now for the part almost nobody is talking about. Anthropic is not a normal corporation. It is a Delaware Public Benefit Corporation, a legal structure that requires the board to balance shareholder profit against a stated public mission, the safe development of AI. On top of that sits the Long-Term Benefit Trust, an independent body of trustees with the power to elect a portion of Anthropic's board. The trust holds a special class of stock that cannot be bought, and it exists purely to keep the mission in control. What does that mean for you as a shareholder? It means that if Anthropic's board ever faces a choice between your returns and AI safety, they are legally allowed, arguably legally required, to choose safety. No major company has ever gone public with this structure at this scale. The market has never priced it. In October, it will have to. So who actually owns Anthropic? The two biggest names might surprise you: Amazon and Google. Amazon has invested roughly $8 billion since 2023 and holds a stake in the mid to high teens, worth somewhere between £135 and $160 billion at the IPO valuation. That is nearly a 20 times paper return in 3 years. Google holds roughly 14%, contractually capped at 15%, on about $3 billion invested. And here is the circular part. Last quarter, the single biggest driver of profit growth at both Alphabet and Amazon was not ads and not cloud. It was marking up the value of their Anthropic stakes. Big Tech's AI profits are, in part, the AI boom grading its own homework. The rest of the cap table includes institutional giants like GIC, Coatue, Lightspeed and Menlo, plus employee equity and the founders. The Amadei siblings keep influence through the governance structure rather than a controlling stake. A deliberate contrast to the SpaceX model, where one man controls 82% of the votes. So what is the complete picture? Three forces collide in this IPO. First, the fastest revenue growth in software history, $87 million to $47 billion in 28 months. Second, staggering losses. $14 billion projected this year alone, with profitability still 2 to 3 years away. And third, a governance structure that explicitly tells shareholders they come second to the mission. Any one of these would make a fascinating IPO. All three together make a referendum on whether public markets believe AI is the next industrial revolution or the biggest capital bonfire in history. At 20 times revenue, Anthropic is either the cheapest hypergrowth story ever listed or the moment the AI boom finally meets quarterly earnings. October 2026 will tell us which. If this helped you understand what is actually at stake in the Anthropic IPO, subscribe. We cover every major market event at this level of detail. Next up, the OpenAI IPO, how Sam Altman responds and what a $1 trillion rivalry means for your portfolio.